All right, traders, welcome back to another weekly breakdown. Today we're diving deep into the NASDAQ on the 4-hour time frame. Now, this is not just another quick glance at the charts. We're going to slow it down, break it apart, and really understand what the market is telling us. I want you to see exactly why certain moves happen, how I spot high-probability setups, and most importantly, how you can use this analysis to position yourself for the week ahead. If you've been blindly buying or selling without a plan, this session is going to open your eyes, because when you understand market structure, liquidity, and price action, you stop chasing the market and start letting the market come to you. All right, traders, let's dive straight into it. Here we are, looking at NASDAQ on the 4-hour time frame, and the first thing that jumps out at me is that NASDAQ is currently in a very strong bullish trend. Now, that's important because in trading, the trend is your best friend. When you know the market is trending strongly in one direction, you want to align yourself with that direction. And in this case, that means we're going to be focusing primarily on buying opportunities. Why? Because in a bullish market, trying to short aggressively can be risky. Yes, you can still make money on sells, but the probabilities are stacked against you. Think of it like swimming with the current versus against it. One is smooth and fast, the other is a constant fight. Now, looking closer at this chart, I noticed something interesting. We have these lows down here that seem to align almost perfectly. When I glance to my left, I see a previous low. And to me, that's not just any low. That's a liquidity point. It's like a magnet for price. The market loves to grab liquidity before making a move, and sure enough, once price dipped into that level and took it out, we saw a strong and aggressive rally to the upside. That was our confirmation that the bullish bias was still valid. So now that we've got a good grip of what's happening in this market, the next question is, what's next? We have a swing high sitting right up here. That becomes our target. Why? Because liquidity lies above swing highs and below swing lows. If we believe this bullish move is going to continue, the market is very likely going to attack that swing high before doing anything else major. Now let's clear up the chart to make things cleaner. I'll draw a line here at the top where that swing high is, and you can see how price aligns quite nicely. Is it perfect? No, but in trading, perfection isn't the goal. The goal is a setup that makes sense to us and fits our trading plan. Here's the plan. If price comes up for a third touch and takes out the liquidity above the swing high, that's when we can start looking for possible selling opportunities. But, and this is crucial, we don't just jump into a sell the moment price takes out that high. We need confirmation. That confirmation could be in the form of a reversal pattern, maybe a double top, maybe a head and shoulders, or even a strong bearish engulfing candle on the lower time frames. That's our sign that sellers are stepping in. However, here's the reality check. We do not control the market. That's why I keep emphasizing, focus on price action, not predictions. We can map out our analysis perfectly, but if the market decides to ignore it and keep pushing higher, we adapt. This is where most traders go wrong. They want to be right instead of making money. So if NASDAQ continues pushing higher even after taking out that swing high, what do? We don't fight it. We ride it. We keep aligning ourselves with the bullish momentum until we see a clear reason to switch. One more thing, let's zoom out a bit. When we do that, we can see that NASDAQ has been respecting this larger upward channel for quite some time. Every pullback has been an opportunity for re-entry. That means if you miss the first entry, don't panic. There's almost always a second and third chance to get in. If you're newer to trading, here's a tip. The market moves in waves, impulse, correction, impulse, correction. Our job isn't to catch every move. Our job is to position ourselves during the corrections so we can ride the next impulse. That's where the high probability trades are. So to wrap it all up, right now NASDAQ is bullish, the liquidity point below has been taken, we're heading towards the swing high, and that's our immediate target. Once that high is taken out, we watch for reversal signs, but we don't force trades. We let the market show us the way. Patience, precision, and discipline, those are your real trading edges. Not the indicator you use, not the strategy name, but how you react when the market tests your plan. All right, traders, that's the breakdown for this week's NASDAQ action. Remember, the market doesn't care about your opinion. It cares about structure, liquidity, and momentum. Our job is to read it, respect it, and react to it. If this analysis helped you see the bigger picture, drop a comment, share your bias for the week, and let's see how it plays out together. Trade smart, stay patient, and I'll catch you in the next session, where we keep sharpening the edge and staying one step ahead of the market.